Hey everyone, Rayce Robinson, your favorite Florida mortgage broker, coming to you with the real estate numbers for Central Florida for June, which really covers till the end of May 2022. And I was really curious to see these numbers because they reflect the increasing interest rates. I was curious to see if we get any extra supply on the market, which we really need. And so let's see how this all kind of shook out here. So for end of May, we ended up with 3,851 homes on the market. In April of last month, we had 2,670. That's a 44% increase. That's actually a pretty big increase. We're going to come back to that number. Listings up, and then you can see here sales down a little bit. We're going to kind of go on another page here to do this comparison. Median price really continuing to go up, and days on the market going down. Let's look at this. So the headline number is inventory went up from 2,670 to 3,851. That's that 44% increase. And that is a big increase, 44% of anything. Though I will say, as we're coming from this red hot buyer's market, and that pendulum is starting to swing the other direction as the Fed is pushing up rates to really slow the market down, we would expect supply to go up. Well, if you have one of something and you go to two of something, that's a 100% increase. So when the number's smaller, that increase is going to seem like a bigger percentage, but again, you have to put it in perspective. If you look right here, we still had 4,000 sales closed. We have, less than that, a little bit less than that of total homes on the market. So we're really at 1 month's inventory. So not a huge increase. Again, in the summer, you expect more inventory. You also expect a little bit higher sales. Let's see. So of that 3,851, 2,998 are single-family homes, 538 were condos, 315 were townhomes. They put here the rate at 5.28%, so this is a little bit lagging. Rates right now definitely creeping in the high fives, even low sixes. So that's increased. So that's the Fed continuing to push the Fed funds rate up, which is increasing interest rates. And new contracts. New listings did go up, again, which you would expect in the summer. New contracts down a little bit. Pending down a little bit. More homes back on the market that didn't work out for all kinds of different potential reasons. Days on the market going down. Again, median price going up. So to me, this is back to no big surprise, and I haven't really seen the needle move that much. I am expecting the needle to move because in other markets across the nation, you are seeing some more inventory. Florida is in a weird spot where you have people moving all over the country to Florida, which is helping in one sense because it helps the economy and all those different things. But as far as housing prices, if you have people moving from California, New York, and places where the cost of living is higher, they're willing to pay more for a house. Plus, they typically make more, and they're still working for these companies. They're just working remotely. So that's one thing that affects our market here because they come here, the weather, and we have state tax and all kinds of different reasons. So no big difference. I mean, we do have a little bit of increase in inventory, but again, that's really expected to be in the, for the summer. I'd really like to see 4 to 6 months of inventory. And that might seem strange to say, but there's so many buyers that really can't get in the market because there's so much cash buying and there's just not enough homes for people that want to buy. And a balanced market is somewhere around 4 to 6 months of inventory. So we really want to see 15,000, 16,000 homes on the market to be what I would consider a normal market. Now, I did have someone ask me, so I'm just going to cover it real quick in this video. I also did a complete other video about this as well. I was interested because I've heard people say we're in for a crash. And I kind of like to use the analogy, we've been the most red hot market of all times. That pendulum is swinging, the other direction, but it's going to go red hot, seller's market, balanced market, buyer's market, and then some kind of, crash, call it, 20, 30% depreciation. Is that ever going to happen? There's no way to know. I mean, if I was a betting man, there's just nowhere for that inventory to come from. Fannie Mae, Freddie Mac, Zillow, all the big entities predicting the market to really flatten out over the next few years, getting maybe 2 to 4% appreciation. No one at this point, at least based on the data, predicting any big decline in prices. And there's no way to know. So let's start there. And two, there's not as many places for that inventory to come from. 2007 and 8, I was involved in that market. Everybody was short selling. Everybody was upside down. Most buyers have equity. They've got good credit. it's just really a different makeup. I did pull up this chart, which I did a whole video about, but I was curious. This is the housing market since 2003. And I was curious, they say rates are high, but you can see here on this kind of line, this is rates. Rates have often been, well over 6%. That's not that uncommon. But in 2008, or let's see, January 2007, December of 2007 and January 2008, there was like 25,000 homes on the market, or 31 months of inventory. That's just crazy. So that's how many homes that you would need to get approximately to start getting really swings in the value of property. And again, Fannie Mae, Freddie Mac, all these entities, I had someone say it's a conspiracy. These are obviously all people involved in the mortgage industry, but there isn't a conspiracy. It's just right now, based on the data, that no one could see where that inventory could come from. I'd be the first to admit, with the Fed pushing rates up and inflation and the amount of appreciation that we have, that with the average median income, that is a pull on the market. Again, with so many people moving from across the country, I really just see the market turning more into a buyer's market, or at least balanced market, which would be nice, meaning there's not going to be 15 offers on every house. You can actually wait 3 days to go see it. And so that's what I would consider getting more balance. Again, no one knows. We're going to keep watching the data. Data's king. That's what matters. Right now, a little bit of bump of inventory. Rates, high fives to low sixes. So it is decreasing affordability some as far as people qualifying for financing. Still lots of cash offers in the market. Still homes selling very quickly. Not even 30 days of inventory, which in the the 20 years that I'm doing it is still at all-time low inventory. So again, nothing yet. We're going to keep looking at the data and see if inventory does increase. I'm praying it gets to at least a few months of inventory, so some of these first-time home buyers that I've got pre-approved can have a good chance of getting their offer accepted. And it is a good time, I would say, if you're thinking about buying a home, to at least be thinking about getting pre-approved right now, while there's inventory starting to grow, at least look like it's starting to grow, so that you can be ready to buy a home when the opportunity comes. So if you have any questions on this or anything else, you're looking for a great lender, no lender fees, easy, transparent, simple mortgage advice, Google me, call me, reach out to me. I'd love to help. With that, make it a great day. Talk to you soon. Bye-bye.